Hello fellow investors, I'm screening 3 discount store stocks right now, namely DG, Dollar General, DLTR, Dollar Tree, and BJ Wholesales. This is the last leg of the discount store series. I've screened Walmart, Costco, and Target previously, and I gave you my best entry prices and whys. Go watch those videos if you haven't yet. First stock I'm screening is DG, Dollar General. This is DG's valuation summary. Overvalued. Again guys, my fair values here and entry prices are not necessarily true for DG. This is merely the prices if I'm screening DJ like any other tech stocks or other stocks for that matter. But we've established that my second metric is not the best metric to use for this kinds of stocks, so let's just disregard these numbers. I'd give you my best entry price for DG later, but first let's look more into this stock. DG is now down 10% of the highs, gives out an annual dividend of $2.2 per share, a yield of 0.94% of the current price. EPS is increasing, good. OSN is decreasing, good. They bought back 42 million shares in 5 years. Their margins are twice of Walmart's and Costco's, and the same like Target's, around 4 to 6%. Price to free cash flow is high, 34.47. I want this below 20. And for that, I'm not a buyer of this stock for this particular metric. Dividends are safe though for DG. I think only 22.56% payout ratio. Historically, it's expensive for all three submetrics: PE, price to free cash flow, and PB ratios. Current PB ratio is 8.92. Expensive, I want this below 5. Current ratio is 0.97, also bad for the quarter. Debt levels are manageable, I'd say. Very poor cash though. Now, at what price should you buy DG? Here's how. We'll use the historical data to determine the best entry price for DG. First, PB ratio, I have an allowable PB of 5 only. At the current price, it's 8.92. Historically, it's around 3.99 to 4.46. So the equivalent prices for those PBs would be $105 to $131. DG has a total equity, MRQ here, of 5.962 billion. Simply multiply this total equity to the PB ratio and you'll get the market cap. Then divide the market cap by the number of shares and you get the equivalent price. We should then confirm these prices, 105 to 131, using the historical price to free cash flow and historical PE. For price to free cash flow, I have an allowable price to free cash flow of only 20. Beyond that, I'm not buying. So, at 20 price to free cash flow, I have a price of 136. But again, 131 is 5 PB. So, $136 should be above 5 PB. Therefore, I can use these prices for price to free cash flow. Now, with historical PEs, the lowest historical PE is at 14.22 with equivalent price of 139. So again, above 131. So I'm not buying this for this submetric as well. But at 131 price, we have a PE of 13.47. Let's confirm that to DG's chart. This is like a Costco. Among the sector, this is overvalued easily. At least if we use the same metrics we've used with Walmart, Costco, and Targets. My entry price would start at 131, but my 2% dividend yield is at 110. So I think the best price for DG is 104.8. The PB ratio of 3.99. But again, that's just me because I value my dividends as well. So yeah, I think DG is a growth stock like a Costco. I'd easily put this on my avoid list. Next stock is DLTR, Dollar Tree. Based on this valuation summary, the stock is overvalued, but let's look more into the stock. DLTR is now down 8.61% of the highs. No dividends, too bad. Normally, I'd pass on this, but sure. EPS decreased, not good. OSN decreased though. They bought back 12 million shares in 5 years. I think that's low, but sure, at least they're not diluting. Their margins are like DGs and Targets, around 2 to 5%. Price to free cash flow is beyond words, 101. I want this below 20. They reported a weak quarter. Historical data suggests that DLTR is overvalued in all three subsections of this metric. Current PB ratio is 4.41. This is good. Within my 5 threshold, current ratio is strong. For the quarter, 1.46. Their debt level is manageable, I'd like to think, but very poor free cash flow trailing 12 months. Let's look at what prices we should buy DLTR. Allowable PB of 5. Equivalent price is 184. So anything above 184, avoid. Lowest historical PB though is 4.24 at 156 to 4.89 at 180. Lowest band of the PB historically is at 2.42 to 2.53. The price is at $89 to $93. But can we really reach that low? I don't know. I can't use the price to free cash flow historical metric here, obviously. The free cash flow turn 12 months is just terrible. So, historical PE, lowest average is 19.76 at $130. 21.29 is $140. If we plot these prices on the LTR's charts, 156 to $180 area here is the average PB for the LTR. The 130 to 140 area here is the average PE for the LTR. And finally, the $89 to $93 area here is the lowest band of the historical PB. What to make of this? Well, for very obvious reasons, the $89 to $93 area should be disregarded. I don't think we'll see those lows again. But again, everything can happen in the stock market. But for now, I can't imagine the LTR going back and trade at around 2 PBs. Now, if you had bought it at 130 when Walmart, Target, and Costco sold off, apparently the LTR was affected. Congratulations, you're still in the money. 25% retracement. But I have a feeling that we'll see this gap close at 140 again if 156 ever breaks. I think the LTR here is fairly priced, and you guys know how I feel about fair valued stocks. I don't promote buying at these levels, but if you want to defend 156, sure, I'd understand, but I guess the most realistic entry price here for the stock would be $140. But again, I wouldn't hate you if you buy anything below 160. I'd rather buy here at this level, 130 to 140 levels, than here at 156 to $180. The last discount store stock I'm screening is BJ's Wholesales. This is BJ's valuation summary. Based on these metrics, not one metric is good for BJ. But let's look more into the stock. EPS is increasing, good. OSN is increasing though. They've diluted 47 million shares in 5 years. I think there's more dilution to go. No dividends, 16% of the highs. Margins are like Walmart's and Costco, around 1 to 3% only. Revenue growth is here though, although not as strong as the other discount stores. Price to free cash flow is too high, 29.1. I want this below 20. Historically expensive as well, except for the PB, but still above my 5 threshold. So, current ratio is weak as well, 0.8. I think their debt level is manageable though. Let's look for the best price we should buy BJ. I have an allowable PB of 5. Equivalent price is $27. So anything beyond $27, I'm not a buyer of BJ. We then have to confirm this entry with the other two submetrics, price of free cash flow and PE. Unfortunately, I can't use the price of free cash flow because everything here is just beyond $27, which then would mean an above 5 PB ratio. Same with historical PE. At $27, the PE would be at 8, a taboo almost for the sector. So I guess BJ stock is easily a $27 stock. I think this is a growth stock like a Costco. I mean, it's at its infancy years. I think there's more growth to come. So I kind of understand why the current price. There you go, guys. 3 stocks, 3 enterprises. Just a quick recap. DG is overvalued. I'd put it on my avoid list. It's a growth stock with high multiples. I'd buy DG at $104.8 with 2% dividend yield and within my allowable PB. DLTR is at fair values, I'd say, but I'd only recommend buying at $130 to $140 range. See if the gap finally fills. I'd recommend buying the LTR at $140 for sure. For BJ, I'd pass, easily overvalued. I'd buy at $26.66. Again, these prices are only good for the quarter. Their numbers, fundamentals could get better, and these entry prices could change and improve as well. See you guys next video.